So it's fair to say that most people tend to fix their mortgage rate. But is that the best thing to do right now? Let's find out. Hey everyone, welcome back to the channel. My name's Adam. I'm an expert mortgage broker. Today we're talking about remortgaging and fixed rates versus variable rates. What's best? What the options are? What does it all mean? Now, if you find today's video useful, please give us a thumbs up, subscribe to the channel, then you won't miss the next one. Now, don't quote me on the exact number, but I would say at least 90% of the mortgages we do traditionally are a fixed rate. In fact, probably more, 95%. Most people tend to fix their mortgage. They want the stability that brings, the security. They want to know what it's going to be each and every month for a set period of time. That is the beauty of a fixed rate. That's what a fixed rate does. That's why people enjoy a fixed rate. And there's a lot to be said for that, you know, the stability and security. You know, I'm on a fixed rate currently. I did mine a little while ago, so thank goodness it's a little bit lower than you would get now. Sorry to rub it in to anyone that's looking for one right now. Yeah, a fixed rate, that is generally the way forward for most people. Now, at the moment, it's cheaper to fix for 5 years than it is for 2 years. I've talked before, if you watch any of my other videos, about swap rates and the fact that it's that dictates what fixed rates are, not necessarily the Bank of England. So even though the Bank of England has gone up a little bit lately, well, a lot lately, fixed rates are actually starting to come down a little bit. So at the moment, it's cheaper to fix for 5 years than it is for 2. But would I fix for 5 years right now? I'm not sure. It's quite a big decision, and there's a few things to think about before we decide. So we all know what happened in 2022. Liz Truss, God bless her, came in and shook things up a little bit, didn't she? And the whole country didn't know what to do with itself. Mortgage rates all but disappeared for a few days, and then when they came back, they were a lot higher, and they kept on going up. They were really, really high, higher than most of us remember, really, in our kind of house buying lives. Obviously, a long time ago they were a lot higher. Your parents probably tell you about that, but by today's standards they were really high. And it's that kind of political and kind of economical factors, those things that dictate what the fixed rates are. The Bank of England hadn't actually begun to do too much back then, but fixed rates, shot up quite considerably. But now we're starting to see them come down a little bit. But I want to talk to you about an alternative, because if fixed rates are starting to come down, do you want to fix yourself into a rate now, knowing that actually in a few months' time you might be able to get a slightly lower one? So let's think about what the alternatives are then. So I'm really talking about a tracker mortgage, a Bank of England base rate tracker. So a base rate tracker kind of does what it suggests, really. It tracks or follows the Bank of England base rate. So if the Bank of England base rate goes up, your mortgage goes up by the same amount. When the Bank of England goes back down again, then your mortgage goes back down by the same amount as the Bank of England. So it's a flexible mortgage. It's a variable mortgage. It will go up and down. Now, if you haven't got the budget to consider that your mortgage might go up a little bit before it comes back down, a tracker might not be the best thing for you. You might be best just cutting your losses and going for a fixed rate. But a tracker will give us some flexibility if you choose the right one, and that is the big one. If you choose the right one, it must be one that doesn't have a penalty. Now, there's a few lenders to choose from, a handful of lenders that have these tracker mortgages with no penalty. So a penalty is what we call an early repayment charge, and that just means if you pay off the mortgage early, they make an extra charge. They charge you a penalty because they're not going to enjoy your mortgage payments for the next however long. So if you pay off your mortgage early, the same with a fixed rate. If you come away from it early, then you're going to have a penalty to pay, and that is the big thing. So that is the must-have of a tracker. Don't go tying yourself into a tracker at the moment, because if the Bank of England does go up a little bit more and you can't come out of it without paying a penalty, that's a bad thing. So there's a few lenders to choose from. You can probably find them online, but otherwise speak to your mortgage broker, speak to us. We'll be able to tell you which lenders have got trackers with no penalty. So the idea of this then is we swap you onto a tracker mortgage. So if your remortgage is due in the next few months, we swap you onto a tracker mortgage, and just keep an eye on things and just monitor what fixed rates are going to do, because if fixed rates do continue to come down. Every few days now, a lender's emailing us saying, oh, we're reducing our rates. And that doesn't mean that, the best rate is coming down every time. It just means that they're shuffling around a little bit, trying to get your business. They want to lend money. They didn't lend enough money last year because of everything that happened. So lenders on the whole have got money to lend. They want to lend you their money. And so to do that, generally speaking, the high street lenders, they need to have a good rate. So they're arguing with each other, fighting about who's got the best rate. And that is only good if you're looking for a mortgage. But having a tracker mortgage now gives you this flexibility you need. So your mortgage is okay. It's going to be about the same as the equivalent fixed rate is now. Obviously, it may go up a fraction if the Bank of England goes up again. They may do, I don't know. But it gives you that kind of flexibility to sit on the tracker rate at a similar rate to what you would get as a fixed rate, but it's only a short-term measure. We only want to do that for a few months whilst we monitor what fixed rates are going to do. Because if fixed rates continue to come down, let's say in 6 months' time they kind of get to a bit of a plateau, they sort of stop, they stabilise, then that's the time to fix. Or if you get nervous that things might start to go back up again, then that's the time to fix as well. But if you've got this tracker with no penalty, you can fix at any time and it doesn't cost you anything extra other than what it would normally do to fix your mortgage anyway. So you're not going to be losing out on anything there. So once that period of monitoring is over, you fix your mortgage, you fix for another 2, 3, 5 years, whatever is best for you at the time. Then you've got your stability back, you've got your security, you know what to budget for each and every month. And then you can just forget about it then until remortgage comes up again in a few years' time. So if you're due to remortgage soon, that might be an idea for you if you want to talk about it in more detail with us. There's a link to our website in the description. You can go and see who we are. If you want to just book an appointment straight with us, straight in our diary, there's a link in the description for that as well. So I will look forward to speaking to you all soon. If not, I'll see you on the next video next week. Take care.